All right.
All right, here comes money. Stand by.
But we're going to wrap.
Money in the bank.
Rates are good. Pretty exciting.
You know why? Why?
Free money. You understand what I'm saying?
Welcome back. Thanks for staying with us. This is the money segment of the big program. Kelvin Kaemingk, ladies and gentlemen. 651-231-2500. That gives you the best rate. That gives you the best overall transaction experience in the United States of America, right there.
It gives you, it gives you higher rates, high fee. Man, tough week.
Oof.
Tough week.
So when is it going to end? I mean, they just keep raising. I did hear that the GDP now they expect to be down off a tick.
Yep.
So maybe that will signal.
Yeah, we're literally here live. I'm just going to see where the market is right now. Rate watch. So we're a little bit better this morning, but it's, we just had just tough week.
Mm-hmm.
Fed raised their rates again by a quarter to 5.5% now, the Fed funds rate, which is the overnight borrowing rate for banks to the Federal Reserve, but it has an impact on everything, right?
Yeah.
So lines of credit, credit cards, auto loans, mortgage rates, HELOCs, everything is going up.
You've got credit card rates now that are through the, they're like nosebleed rates.
Yesterday, it's one of those things, Keith, that, while we were looking at coffee this morning, I literally pulled up my rates and said, hey guys, here's real, this is our rates, it's raw. And, you're talking, low sevens, mid sevens, that you're going to be paying. So we can put some money down, pay more in points to get you in that 6.99 range, which, psychologically maybe helps people, but payment wise, it doesn't move the needle a whole lot, to be honest. But dang it, it's high. Rates are getting a little uncomfortable, right? So I sent a thing out to all my real estate agents I work with, and we're at 22-year highs now, and I've been in the business 21. I said, okay, it's time for, here we go again. I don't have another 20 years in me, but probably got 10 or 15. But we're gonna hope. We just got to peak out here. We got peak and then come back. And
I don't know how fast things are going to come back.
Well, I can tell you exactly.
Well, you said they were going to come back in May
10th.
So we know how good you are at that. I just think that we're in for this for. I think a year from now we're still going to be talking about high rates. Now maybe not as high.
Right.
If they go above 8, I don't see them going too much above 8. I just don't see them going above 8.
Yeah, here's what, I was doing some stuff on kind of where's the market going and the prediction, here's where we are, here's what the average. They think at the end of the year, we will average. So every year we have an average interest rate, they average it over the year, and they think we'll be about 7 1/8, 7 1/4 by the end of the year. Like that's what we will have averaged. And then next year, the first quarter, they think we're gonna flirt with 8. Be a little bit over 8 for the first quarter.
Really?
Yeah. Second quarter start to come down, and then by election time, close to the election, start to see a decrease, and then we'll get back to.
I'd start to see a decrease, but that decrease might just be the high 6s or low 7s.
They think that we'll get back to high 5s. High 5s to 6.5 is going to be kind of where
that's probably not
well.
Gonna happen.
Hey, look at my predictions so far. I've been wrong every time.
Been wrong every time.
So
the only thing that I see is, what I see? I see them.
I'm actually pretty good at this.
Next year, seeing that the economy is like recession teetering.
Mm-hmm.
3 months of lower GDP, reducing GDP, and they reduce rates.
Mm-hmm.
Because that seems to be their only arrow in the quiver.
Well, that's why they're doing that right now. That they're raising it so they can come back off of it. But here's the thing that they said. So here's why they raised it again, because they're hoping there would be a pause. They said job gains are robust.
Mm-hmm.
Unemployment is low, and inflation remains elevated. Now, today, the inflation report comes out, and it looks like it's going to go down a little bit, so that's good. But they say the Fed economists are no longer forecasting any recession. And they were trying to push us to recession, and that's why they keep raising this, because they want us, because it's either hyperinflation or it's recession, and you got to pick your poison. and obviously we're going into an election year next year. Everything's going to be focused around the economy, so they're going to try to
Do
get this
anything
better.
they can to
Yep.
make it look good.
But man, it's impacting. When you're talking to people and you're talking, hey, 7.5 with no points, no discount, no nothing. I mean, you notice that. I was looking at my charts on our, I've got this document we use for the radio show, and I'm going, okay, when rates go from 2.99 to 3.5, be careful. Now you look at that, and my chart didn't even go. Now we're back to 7.5. When I got in the business, I was looking at what was the interest rate I was selling 21 years ago when I got in the business, and it was literally 6.875 is where we were, and I'm just like, man, it's kind of, we're higher than that right now. But again, like we talked about, interest rates on credit cards, 26% this week. People carrying balances. I was on the phone with a client yesterday, and I'm just like, and I literally said, we just got to pump the brakes a little bit. Let's do some things and get you in a better financial position, because you can't be carrying $40,000 of credit card debt at 26%.
Right.
We're never getting ahead. Well, I'm making all my minimum payments, but minimum payments on that stuff was like $1,000, and you're not making headway.
Right.
That's what people get. You're not making headway.
Yeah.
You're
because paying the interest,
and no one
you're
looks
not
at
even covering all the interest.
Not
Are you
even,
at that?
no.
You're not even covering all the interest. So you could not use the card and make your minimum payment, and the balance would go up every month.
Yeah. So there's a lot of things I think people are. That's why, quite honestly, we're doing a handful of refinances every month. We're doing okay. But you're looking at, we got some refinances going in. It's a reallocation of debt, and we got this great tool. If you're struggling with some credit card debt and you got this, and you're like, I'm not sure what to do. I know we have some equity, but I got this nice rate of, let's say it's 3-4%.
Right.
Let's at least talk and say, okay, does it make sense? We have a cool worksheet that we put in your credit card debt here, what your interest rate, and then kind of what's your effective rate on all your debt.
Right.
And then what could we go to?
And what are you paying out every month regularly?
Right.
Just household paying out.
Yep.
And maybe you could reduce that number by $1,000.
Exactly. So we're doing our cash flow analysis, makes sense, doing all this. Yeah, there's a lot of tools we have. So I don't think it's bad to continue to have conversations. And like this client we were talking to yesterday, it's just a matter of like, let's get you ready. Let's get you ready to buy a new property versus just jumping in. And now we spent 100% of our resource, because it's a VA deal, a VA loan, great loan, zero down. They still need closing costs because it's tough to get those yet still in today's market, and that would literally tap them out. So now you're putting somebody in a position where they have less than, $2,000 in any account, running $30,000-$40,000 of credit card debt over here. I'm just like, we're just like,
You're too vulnerable.
Yeah. Right. But then you hear all the politicians talk about the fact that what percentage, John F. Kennedy Jr. had a town hall deal on Fox with Hannity and all this, and it was really well done. But he said, like, most of the people can't put their hands on $1,000 right now, and it's like, man, I think we just have an obligation and a responsibility to help people get positioned financially better, and we're in a position to help people do that. So it makes sense. So rates are, to summarize, rates are a little bit higher this week. We hope they come down a little bit. I just need this thing to stabilize, and then the higher ups in our company, all that, are like, hey, this is okay. Hang in there. We're doing okay, because as we do this, more and more companies are going out of business in our industry, and that's a good thing when you're the largest company in the industry, because you have a lot more runway for loss, right? So that's where kind of we're at right now.
And it's funny because people talk a lot about. I watch the same thing with Kennedy, and you talk about the concern for the environment and the concern for this and the concern for the other thing. It's hard to be concerned about stuff when you can't put your hand on $1,000. When if the car breaks down, you're trying to figure out how to cover the cost of that. You're not thinking about global warming or climate change or any of that right now. So get the half of the population in a position where they're comfortable and be able to take care of their families, and that maybe they can then start focusing on maybe doing some good for others, and that's just a good thing for our whole culture and our whole society. And it all comes back down to housing because it's just a big deal. It's 30% of the economy at least. And every time there's a transaction, just think of it. Someone buys or sells a house. That person who bought that house, are they going to probably buy some paint?
Probably.
Are they going to go buy maybe a new piece of furniture? Are they going to maybe get a new appliance? There's just so much that comes with that purchase.
Yep. You're right. So if you want to have a conversation, I'd love to have that conversation with you. Give me a call at 651-231-2500. Again, 651-231-2500. Love to have a conversation, grab a cup of coffee, talk through your situation, get you well positioned to make smart decisions regarding your money and your mortgage.
And if you take one thing away, it's maintenance today.
Yep.
Maintain your financial health and well-being, and look for a way maybe you can reduce your overall spending as a family on your month-to-month, and maintain your assets. I mean, if you own a house, you spent a lot of money and to buy that property, your family is in there. Maintain that asset. That way, when you go to sell, if you're going to sell and move up or move on, you don't have 10 years of deferred maintenance that you have to suddenly come up with to get it ready for sale. This is your Real Estate Chalk Talk. I'm Keith Ettner Sr. with Kelvin Kaemingk. We'll see you next week.
You've been listening to your Real Estate Chalk Talk.